Hello traders and welcome to another video review. Today is Friday, February 24, 2023. Let's find out what's going on with the Forex calendar. Plenty of data is scheduled for release today. Nevertheless, we are going to concentrate on the most important one. So we got already speeches from the BUA president, from Germany, and the vice president as well. We have a German GDP data for the fourth quarter published already. This is great disappointment here. Actual reading was minus 0.4%. Forecast was minus 0.2%. So it's already below the forecast and even below the previous reading of 0.5%. So the overall German GDP for the fourth quarter is 0.3% versus the expected 0.5%. JFK German consumer climate data are deteriorating even harder than the expected, minus 30.5 points. That's everything during the London session, and there are more data scheduled for release during the New York session. What we got? Core PCE price index, data, personal spending data as well, Michigan consumer expectations and Michigan consumer sentiment. But the key event of today from the New York session is new home sales. There's supposed to be some kind of improvement, and the number of the new home sales should increase from 616 to 620,000, of course. Then we have speeches from MRFC member, then we have speech from MPC member Tenreiro as well, and of course at the end of the trading week we got US Barker Hughes, US rig count, and all of the net CTFC, the speculative net positions. In the meantime, some data from the Canada are here scheduled for release. Manufacturing sales and wholesale sales scheduled for release at 2:30. So plenty of data today, especially during the New York session, so please stay focused. Today, let's take a look at the euro dollar after the German GDP data had been published. So what do we see on the on the euro dollar after German data had been published is that there isn't much more of the reaction, but we still can do some sort of the lines here. And as you know, we are following this kind of a pattern here. This is the ending diagonal pattern on the euro dollar 4-hour time frame chart. So what do we have here is something like this, and market is apparently, as you can see here, market is following this pattern because we got another touch of this lower line here. So what it means, basically, for all of you who doesn't know this pattern, this means that after this squeeze, as you can see to the downside here, is done, the volatility here decreases significantly. We should expect a bounce to the upside right after the falling wedge pattern is completed. If, however, there is some kind of a big breakout to the downside, that means it's even worse for bulls than they expected, because it would mean that the technical pattern didn't work as it should work, and now it is invalidated and we are trading way lower. So the situation for the bulls will deteriorate significantly with that scenario. But our first scenario, our positive scenario, is the breakout to the upside towards this target levels here. There is still no candlestick pattern here on the bottom, so maybe something else will happen soon. And as you can see, we are still trading below 50 and 100 periods moving average, waiting for a breakout to the upside, maybe even towards these two averages. 1.0686 is the 50 period moving average, and 1.0743 is the 100 period moving average. So those are the potential targets for the euro to the dollar bulls. Let me just grab some kind of a screenshot and we are done. So euro dollar, of course, will be traded today. Canadian dollar will be traded as well. So let's take a look at the 4-hour chart of the Canadian dollar. So what do we have here? You can see a big like a kind of a consolidative move. This market doesn't actually, is not trending anywhere. The market range is roughly 300 pips, so it's not that big at all. Nevertheless, just recently you can see that we are a little bit squeezing here from that low here. You can see that we got that trend line. Okay, so we got this trend line, which is of course pointing to the upside, and apart from this trend line, we have as well some sort of the horizontal line. This one was violated already, 1.3520, but we got one more, and this one is located around here. So let me just move my chart so I can place it correctly. There you go. This is the line what I want to place. This is 1.5664. So that's the level. That's the next target level for bulls here. And right now 1.3561 is the high. The local high is 1.3580. So the market is not that far away from this level, and it looks like only with the breakout above those levels here, only with a breakout above the blue zone, we can say that the market is back in and is continuing the uptrend basically. So for now it still looks like a very nice movement. Yes, of course, it looks like a total control right now over the market in the short term, of course, by the bulls. That's not a problem. Nevertheless, we need a breakout to the upside, strong breakout to the upside, at least to test the zone in order to see how it is doing there. The next market we want to take a look at is the SP 500. Just recently we talked about this gap down that happened here. So then we have the consolidation, then the market dropped lower. Yesterday's low was made at the level of 3,966. So this is our local low, and it means as well that maybe today the market will try to test some sort of the technical resistance. So we got 4,046 as the one target level for bulls, and we got 4,062 as the second target for bulls. Please take a look at the momentum here, because the momentum is trying to bounce from the extremely oversold market conditions on the 4-hour chart. So right now we of course should be prepared for a bounce to the upside. It looks like a bullish engulfing pattern to me on the 4-hour chart. So right now definitely this zone is worth watching, and these two moving averages, 50 and 100 moving averages, are getting closer to each other. So maybe there will be some sort of touch, and then a kiss, and then a breakout. Most likely the 50 periods moving average will break below 100 periods moving average, because the 100 periods moving average is slower one, and that's another signal. In that situation, this is a bearish signal for all of the traders. So keep an eye on the SP 500. It looks like it wants to break to the downside if the market won't close above the moving average. What is going on Bitcoin then at the end of our technical part? So of course we got this this level here, the highs at 25,257. Fine. Nevertheless, the market still doesn't want to go anywhere near that level, and is going towards 23,349. This is the low from the February 17th of the February 2023. If we zoom in, we can clearly see that maybe that's around the 38% of the last move to the upside. So now the Bitcoin is locked between the 50 and 100 periods moving average. It doesn't do much. The recent 12 hours is almost no activity. Nevertheless, please notice that it was rejected from the 50 periods moving average after bulls tried to break higher. All right, so that might be some clue for all of the traders regarding the situation on the Bitcoin. Right now we are below the level of 50 on RSI, so momentum is negative. Momentum is not that strongly negative, but it is negative. It's definitely below the level of 50, so we need more upside in order to break back above 50 periods moving average, back inside the positive territory and test the recent high 25,257. We need to break above it clearly and sustain this breakout in order to continue to the upside. Otherwise, this will be treated as another corrective cycle during the downtrend on Bitcoin. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next week. So take care and bye bye.